If you're thinking of investing in any company, one of the first things that you always want to do is to gather information. And then with that information, you're able to decide if you should invest in that company or not. In this video, we'll talk about how you can go about gathering information for your potential investment and some of the sources that are available out there that you could use that would help you hopefully make a good decision. And last but not least, we're going to cover some of the risks associated with investing in single stocks. If you're new here, welcome. If you're a returning subscriber, thanks for watching this video and hopefully you find value in this one. So if you haven't subscribed yet, please subscribe to the channel and don't forget to drop a like. Now, one of the first things that I want to establish is if you are looking for information for a potential company or a stock that you've found, you first need to understand the rationale behind the product or the business. According to Warren Buffett, you shouldn't invest in a business that you don't understand or cannot understand. And this is generally where I start my own investigation of a company that I want to invest in. Do I understand the business? Do I understand the type of investment it is? If I do not understand it, then maybe I should pass. But if I have a good understanding, I start to look further. The second step that I look into is the company itself. So this is where you can go to the company's website to gather more information about the company, the products they make, the services they provide, just gathering that overall information and trying to check the health of the company from just a broad overview. Now, the next step that I go into is their investor relations page or their financial reports. Now, every quarter, any company that is listed on the stock exchange is required by the SEC to provide reports, their financial reports. And that's how a lot of these investors out there that are professionals, this is generally where they go to gather information on the company. And the goal here is that you want to use this information to get an overview of what is really happening under the hood. Think about trying to buy a car. One of the first things you want to do is to make sure that the car is in a good shape. And it's the same thing that you want to do with an investment that you want to put your money in, especially if it's something that you want to put in for the long term. And this is something important to also establish along the way, because based on the information you gather from these financial statements, you're able to use that to decide if this is something that you hold for a long term or for a short term. Or if you think about it in terms of trades, is this going to be a long-term trade? Or is it going to be a short-term trade? Understand, you don't have to be an expert. You don't have to be an accountant. You just have to be able to look at the numbers. And you just have to look at it in terms of the numbers. Are they going up or are they going down? Is there a rationale or an explanation as to why those numbers are going down? Or is there an explanation as to why the numbers are trending up? If they're trending up in the good way, then maybe it's a company that is making money. And of course, that is always reflected in the stock price. And if the numbers are going down, that's always reflected in the stock price as well. But that shouldn't be a reason to get discouraged, because if they're going down, that might be an opportunity to buy. And we can get into things like price to earnings ratio and the likes, but without making any of this complicated. You just need to be able to look at those numbers and use your own judgment as to if this were your own finances, how do you feel about the finances of that you're looking at? Is this something that you prefer, that you would want to invest in? Or is it something that you want to avoid or not invest in at the moment? Is it something that you just want to keep watching on a watch list? The next area that I go to gather information is from websites that are out there. Now, understand that some of these websites are honestly garbage, because you personally have to look at your situation and look at what your goals are for that investment. For example, you might look at Apple stock on one website and they will tell you to sell, and another website will tell you to buy. So if you do not understand your own goal and the reason behind your decision to want to invest in that company, you'll be confused. And that's where you need to be able to look at your own long-term goals, short-term goals, to decide on what investment to buy and to sell. And honestly, I go by that more often than just recommendations from all these websites. But it's always good to gather opinions out there, especially from the quote-unquote experts. The next thing I recommend for you to do is to look at free websites out there. Think about Yahoo Finance, think about CNBC, think about Google Finance. All these websites do have a lot of articles that are generally available for free, and you can use them to also gather enough information for yourself. Now, if any of this sounds too complicated or too much, especially if you don't have the time to start investigating every company and gathering all the information, which I understand. And I do that too. I don't spend all my time on companies. I only have a few companies that I watch closely, and some of them I just rely on the news outlets, right? The ones that I watch closely, yes, I may keep up with their financial report or quarterly reports, but those that I believe in long term, I don't always scrutinize them because I know those companies are solid, so I don't always keep up with them on a regular basis. But like I said, if this is too much, then one of the things you can do is to consider investing in index funds, mutual funds, ETFs, because all these are made up of different companies that are already put together in a fund or in an ETF that you just need to purchase, and you can then dollar cost average over time. And as you buy it over time, as the prices fluctuate, today is up, tomorrow is down, over the course of the years, with compound interest, your money will grow, and that is what you want at the end of the day. Investing in single companies obviously comes with some risks, and those are the things I want to talk about here. The first thing is the risk of the company losing money. For example, a good one would be Peloton. If you invested in Peloton during the pandemic and you bought it when it was almost 120 or so, the company is worth almost nothing now, and that is because of the fact that the market has changed and the company is just finding themselves losing a lot of money. Another thing to consider is the potential that some companies can really get into problems that can be a lot more beyond your control. For example, if you think about pharmaceutical companies that make drugs, and one day the drug is the best and it's working great, and 3-4 years later, these companies are getting lawsuits and they need to cough out a lot of money to compensate the victims. And this generally could ruin a company if it's not well grounded. The problem is when you fall in love with a company, you end up not seeing some of the problems or some of the disadvantages of holding that company for too long. And that means when you're supposed to sell, you're not selling. When you're supposed to buy, you're not buying. And you find yourself either buying when it's too expensive or selling when you're supposed to be holding. And this is the thing that you need to consider when it comes to buying single stocks. The next risk of investing in single stocks is the volatility that comes with that. Because as you invest in a company, if this company goes up today, you're making money. When the company is losing money, you're also losing money. Whereas when you diversify your investments in like an index funds or ETFs, that generally would help to minimize or reduce the volatility of just strictly investing in one company. I hope you found value in this one, and I hope that this has been informative. And if you have, please don't forget to drop a like on the video. I'd love to see you in the next one.